Hey everyone, welcome back. In this video, we'll continue working on chapter 11. No mini exercise associated with this video either, but let's get into it. The focus of this video is incremental cash flows. Some of these guiding principles that we're looking at here, I'm going to want you to, obviously you don't have to memorize them in this new format, but if you can recognize an example of each of these and understand what they are, I think you'll be in good shape. And most of these actually follow from the idea of a cash flow being incremental. So let's discuss that. An incremental cash flow is one that happens if and only if a project occurs, right? So if we do a project, the cash flow happens. If we don't do a project, the cash flow doesn't happen. And let me show you what I mean with an example from one of my first job ever, actually. I was a pizza maker, and this is a pizza oven example. So an energy efficient pizza oven. Oops, pizza oven. Potential capital project. Costs $10,000 a year, or $10,000 total, and lasts for 20 years. So you pay $10,000 for it up front, and it lasts for 20 years. Revenue, our forecast revenue is $700,000 a year in pizza sales with or without the oven. All right, so this, and in cost of goods sold, $400,000 a year is our forecast with or without the oven. So this oven doesn't make pizzas faster. It doesn't make them more cheaply. It doesn't make pizza that tastes more delicious. The only thing about this oven that's unique is that we save $1,200 per year on electricity and maintenance. So revenue is not an incremental cash flow in this example, right? If we don't replace the oven, we still sell the same amount of pizza in terms of dollars. The costs don't go up or down, right? So these revenue and cost of goods sold are not incremental cash flows. The incremental cash flows in this example are the cost. If you buy the oven, that's an incremental cash flow, and also the maintenance savings, right? So these would be the incremental cash flows that I put on the cash flow timeline for this project. And here's what the timeline would end up looking like, where the cost at time zero is 10,000, and then we've got a 20-year really annuity of maintenance savings. So with a discount rate of 8%, we could figure out, oh, should we replace this oven? Is it worth it? We could find the net present value of this project. Maybe we'll leave that as an independent learning opportunity. I've got it set up in Excel as well, where here's the cost at time zero, and then here's the cost savings, the maintenance savings over 20 years. You can find the net present value of that cash flow stream and go from there. So I hope you enjoyed this video on incremental cash flows. If you've got some work you want to run by me on the pizza oven project, feel free to check your work with me. Otherwise, we'll see you in the next video to continue talking about these remaining ideas that really follow from incremental cash flows. So thanks for tuning in. See you next time.